Yo, what is up, boys? Today we are back with another YouTube video for beginners. It is your boy Nico and Q. Hope you guys' day is going well. Today I'm going to be going over a simple strategy um, that if a beginner literally just started out, that he could do it and give him a good one, right? Right. Obviously, psychology plays a part in trading, but strategy-wise, it is very simple. Okay, we are going to be going over a strategy or a model called the MECH model. Now, it is not my model that I created. All credits go to the creators, PB Blake and PB Patty. Now, they teach this. I'm going to try to simple it down as best as I can. But yeah, let's go ahead and get into it. I'm going to go ahead and go over something called AMD. AMD stands for accumulation, manipulation, and distribution. Now, let me go ahead and mark this out so that it's, a little bit easier to see. Okay, so this area right here will be accumulation. This is going to be accumulation, right? Okay, this right here will be our manipulation leg or manipulation. And then this whole area of it going down like that will be our distribution. Okay. Accumulation is when price consolidates up and down just like this, not really going anywhere. Manipulation is when it goes up like that, fakes out people, and then comes down to make the real move, essentially make the real move happen. Okay. Why is this important? Because it's going to go ahead and give you a good foundation for when we're trading this model, so that you're not just longing or shorting into a dead market, basically, right? Okay. What this strategy consists of is, so let's see, strategy. Hold it. Okay. What this strategy is going to consist of is IFEGs, and I do have a video on fair value gaps. I don't have a video on IFEGs yet, but essentially IFEGs are the opposite of fair value gaps. So if you watch my video, you would see that fair value gaps are like this: 1, 2, 3, three candlestick pattern. It is the gap in between the three candles from this wick to this wick. And then what an inverse fair value gap is basically this right here. So we have our gap right here, right, from this wick to this wick. But instead of price, rejecting off of it like this right here, so this is what we want our fair value gap to do, right? If I can, right, that's what we want our fair value gap to do, right? Reject off of it and, continue to do what we want it to do. But what an inverse is basically when a candle closes below it and invalidates it, right? Instead of respecting it. So that's an inverse fair value gap. It goes through it. The candle has to close below the gap. Okay. Now that we covered that, quick topic, we're going to be going over session lows and high sweeps. Okay, like Asia session, London session. Okay. Now we're also going to be working on SMTs and equal highs, equal lows. I just said that backwards, but equal lows, equal highs, and also I think I should add data lows and data highs, just so just so that you know how it works and stuff like that. This is going to be a very in-depth video, so this might take a bit of your time, but I promise you, if you stay tuned and you take notes, it will be worth it. Okay. This is actually the strategy I traded. I have taken a couple of payouts with this strategy. I had traded this strategy before I started my bottom and top ticking. Okay, so I think this is pretty much it, if I am right. Okay. And yes, okay, I think this is pretty much it. So that is what we're going to be focusing on, is this right here. All right. So let's go ahead and find examples. I'm going ahead and put this. This is just an indicator I use to see sessions and stuff like that. I don't feel like marketing. This, Asia session starts at Trading View uses military time. This starts at 20 o'clock, which is 8 o'clock. Ends at midnight or 0 o'clock. London starts at 2, ends at 5. New York starts at 8:30, ends at 11. But I would realistically start trading this model or just trading in general at 9:30. Okay, that's when it's most volatile. But what we're going to do is we're going to mark out the highs and lows of each session, just like so. So boom, the lows of each. There's the high, and there's the low. Okay. All right. So we have our highs and lows, right? Let's say it is do I have play? Okay. Okay, 1 second. Let me go ahead. Okay. So let's say it's 9:30, right? All right, it's 9:30. We have our session highs and lows, right? So these got swept. It's not really valid anymore. The only lows that hasn't been swept is these lows right here. This will be our London lows. All right, I'm gonna try to make this a bit bigger. So this is gonna be our London lows. That is super big. Anyways, all right. So those are our London lows, and we're going to be waiting. We have to wait for that to happen. So waiting. Okay, swept. Boom. Now we took London lows. Now we're expecting a reversal. So we can go to any higher time frame. Oh, and I forgot to add on to it. And we're going to be looking for higher time frame PD arrays. Okay, like 5-minute fair value gaps, 10-minute fair value gaps, protection box, whatnot, right? Okay, we have one perfectly right here, right? 5-minute, or that's a 15-minute gap actually. So 15-minute gap, this right here. 15-minute gap, right? And we're going to be looking for an inversion fair value gap to go to highs or data highs, stuff like that. Okay, so let's see. Boom, right there. So we have our inversion right here. Now you can wait until we inverse this one too. I think this is good enough. It's really hit or miss for most people that people will wait, but it's pretty much hit or miss. So you enter at the candle closure, stop loss at the low, and then you can target like a 1-to-1, 1-to-5, 2, whatever, right? You can target fair value gaps, right? Like, let's see, 1 hour. Let's see if there's any fair value gaps to target. So you can target this fair value gap right here, like a 2.75. Not bad at all. It's really good RR. You can target that. And then how we're going to go break even is by a gap that is unmitigated. So I would go break even at this gap right here, right? I'd go break even here, and this is our 15-minute. That's our 15-minute, and I'm going to go ahead and enter a position right here. So go ahead, whatever, however much you want. Stop loss at the low, TP at the high, and let's just see how it plays out. So boom, so we got break even. So we would have gotten break even here, right? Because it hit the low, or it hit the 15-minute. But as you can see, it most likely it played out. So yeah, it ended up playing out. But if you follow the strategy correctly, you would have gotten break even by a tick, which really sucks. But you pretty much get the idea of how it works, right? Let's go ahead and go on to more examples. Okay, so now that we have that, we're gonna go ahead and move on back to 9:30 here. Okay. So we don't really. I'm not gonna essentially mark it out, but because these highs already got swept, these lows haven't gotten swept. This high got swept. This low got swept. So now we're just waiting on Asia. So here, it's a bit too small. You guys won't be able to read that. This will be our Asia lows. Okay, now what are we waiting for? We're waiting for a sweep. Actually, before we do that, let's go ahead and find a higher time frame Pediarite. 15-minute gap right here. That's our draw on liquidity too, actually. You can technically use that. Sure draw. And then you have a 5-minute PD right here. There you go. So now we have our boxes lined up. Now let's wait for it to get swept. So boom, swept, tapped into the fair value gap. And then what do we have here? So we want to take the highest time frame inversion. So looks like our highest time frame inversion is the 1 minute. So we take the 1 minute, right? After taking Asia lows, we took Asia lows, and now we can enter a long position, stop loss at the low, and we can go ahead and target a unmitigated gap. So let's see where we can possibly find one. So it looks like right here, we could use that as our break even. We can target this high. Let's see. I'm trying to find data. Good. We can go to right here. You know, it's really up to you. I'll just target a 2RR just for the sake of it. And let's see. Is there a countdown bar on here? I don't know if there's a countdown bar. But we can go ahead and target these highs right here as our break even. I think that's the 5 minute. No, the 5 minutes right here. Yeah, so there's our 5 minute break even point. And then you can go ahead and enter your position, right? Stop loss at the low, target whatever, right? Let's see how it plays out. So it doesn't end up playing out, but that's okay because it is just a statistic. But here's the thing. And actually, let me take that back because I actually haven't been looking to see if there was an SMT. I completely forgot about SMT. So it did look like it ended up, or it appeared to be an SMT right here. If I can tell SMT. So it looks like there did end up being an SMT. Essentially, what an SMT is this right here. So we have our two pairs, M and Q and ES. So that's a pretty bad example. Let me go ahead and make a new one. Okay. ES and Q. Right. See how here we swept the high, right? We swept the high, creating a higher high. Boom. No problem at all. But look what we have here. Something different. NQ didn't make the high because they are corresponding pairs. So they should correspond, right? So rhetorical question, by the way. High right here, but look, NQ doesn't take the high, but it makes a high right here, and then it goes lower. That is going to be your SNT because it made a divergence. That is going to be your SNT. Okay. Now that we got that under control, looks like it just didn't end up playing out. If you you can go ahead since it's out into the 15-minute and there's still an SNT that's valid. You can still look to see if there's another trade. It's completely up to you. Just for the sake of educational purposes, I'm just going to see if there is a potentially another trade that you could take. It doesn't really look like it. Yeah, didn't really. There was no inversion fair value gap, but you pretty much get the idea. Hopefully, if you have any questions, go ahead and go down to the comment section as I will be posting this on YouTube. But yes, that is pretty much the idea of this strategy. Nothing too crazy, nothing too hard. I'm trying to think. I didn't go over data lows and data highs. I don't think I did. So let me go ahead and show you this real quick. Okay. I'm going to go ahead and switch the screen real quick. Oh, why is it like that? Okay. All right. You know what? Forget about it. All right. We're going to stay here. And I'm going to... Okay. So data highs and data lows are a thing called news, right? Like at 8:30. So let's see. That's PM session. Where's 8:30? 8:30, 8:30, 8:30. So 8:30 right here. So let's say a time if there is big impact news called CPI. You can find this on forexfactory.com, W promo right there. CPI is news. It is basically like you don't want to be trading during news typically, but it's just news about the market and what's going on and what people say and stuff like that and what's going on in the world will essentially, affect the market. But you can go ahead and mark the lows of data highs and data lows. So that's what you call them, the news lows and news highs, right? If there was news, I don't know if there's news this day. I'm just marking them out. Data lows, data lows, and data highs. Oh shoot, that is way too, yeah. So data highs, right? These are also key points too that you can mark out. Mark that out, right? You see an inversion after sweeping the data lows with an S&T. That's also a decent longing or short if it sweeps data highs. But yeah, I think that I pretty much covered everything. If not, again, just go ahead and comment down in the comment section. Hope you guys liked this video. Hopefully it was simple and easy to learn. If you guys haven't already joined the Discord server, we're currently sitting at 61 members if I'm correct. But yeah, it should be link in bio. If it's not under the video, it's probably most likely in my YouTube bio. But yeah, hopefully that was easy and simple so that a beginner can learn it essentially. But yeah, go ahead and like the video, subscribe if you haven't, and have a great day and a good rest of your trading week. All right, take care. Bye-bye.